Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and co-presented by their erstwhile market commentator Darren Sinden.
Good afternoon, Zach.
Should we call it the Beijing Crossover Show now, can't we?
It does seem that all roads.
It's got a better ring to it, isn't it? No?
Yeah, all roads lead to China, don't they?
Yeah.
At the moment, it's almost impossible to get away from it. In fact, I've written a whole article about that this week, actually, how interwoven China is within the global economy and our everyday lives. And
but of course, we don't know how much it should be interwoven or not, or how much an effect. Anything. So the linkage between China and the rest of the world is still something to speculate over.
Well, Churchill described Russia, didn't he, once as an enigma wrapped up inside a riddle, and I think that's an appropriate quote to use about China. No, we're completely in the dark, and we can only go with our gut feeling, I suppose.
Right. Okay. Well, we obviously ignore China on the way up. We're looking at it on the way down. I suppose that's the simple way of looking at it. But anyway, today's data.
Okay. Well, we flagged this yesterday, obviously, and it came out very early this morning. But China flash manufacturing PMI for August came in at 47.1, well below the forecast of 47.7, and further away indeed from the prior read of 47.8. Obviously, as we said yesterday, reads below 50 are considered to be contractionary, and clearly this figure that came in was the lowest for 6 years. So, the sentiment was obviously very poor, and the net result of that, China A shares, which again we talked about yesterday, the index sold off by 4.27%, so a further sharp drop in Chinese equities, and as if that weren't enough for people to contend to one of what was expected to be a sleepy Friday for the markets predominantly. We also found out that we were going to have snap elections in Greece as Alexis Tsipras resigned, basically resigning to sort of force the populace to decide if they're going to accept his concessions to Brussels, or whether they'll vote for somebody else who's got a different plan.
He loves his democratic processes, doesn't he? Referendums, elections, and really is being political, let's say.
He is, yeah. I mean, he's playing a good game, calling people's bluffs and asking them, back me or sack me, I suppose, is the right tabloid phrase you'd use here. And then against those sort of negative news items, I suppose you'd call them, we had some PMI data for Europe. Services flash PMI for August came in at 54.3. That was better than the forecast of 54.0 and better than the prior reading, indeed, also 54.0. And then for the manufacturing sector, the flash PMI came in for the Eurozone at 52.4, again ahead of the forecast, which in this instance was at 52.2, and bang in line with the prior read at 52.4. That was taken very positively by things like the DAX and the Euro. I think maybe some of those markets were looking for an excuse.
That saved the situation really today, you would say?
Oh, I think it did, because if we'd had a negative read, I think it could have become very messy beyond what we saw. So I still find myself scratching my head, because although the German data was better this morning, the French was worse, and I don't see how that equates, when you add them all up, to a better read for Europe as a whole. Nonetheless, those are the figures we're left with, and that's what the markets reacted to.